Good evening, investors. Good afternoon, good morning, wherever you're watching us from today. Today is the second of January 2025, the first day of trading in the new year. We are happy to bring you the market update for today. It's very interesting sharing this from time to time. So please subscribe to this channel by clicking that subscribe button, put on the notification bell so that you don't miss any updates that we share from time to time. Just to actually let you know as a disclaimer, all the information we share on this channel is for education and information purpose only. So do your due diligence, consult your investment advisor or financial advisor. So today we are actually looking at the top stories that actually moved the market on Wall Street today. So the first port of call is Alphabet getting a downgrade from JPM, one of the most prominent analysts on Wall Street. JPM is actually downgrading Alphabet from outperform to market perform. So many headwinds, so many negative, expectation is actually being priced into the stock of Alphabet. Number one, Alphabet is facing or could be facing a major competition from ChatGPT, OpenAI. OpenAI is actually planning to roll out Search GPT in the next couple of weeks or in this first quarter. So a whole lot of business people who use search engines, e.g., which is by default Google, many of them are now saying they prefer to actually search using the normal ChatGPT query. Now, if ChatGPT actually goes live and it is adopted at a great extent, um, Alphabet Google search is actually going to see some drawdown in the numbers of people making searches on Google. And by default, Google makes more money, most of its revenue from search advertising. And if if lesser searches are going on Google search engines, Google's revenue is likely to actually underperform. So JPM saying Alphabet is not going to outperform, but a market perform. And also the Gemini AI platform, the model which is competing with ChatGPT, is also seen to be facing stiff competition. Google or Alphabet, they've not been able to actually monetize it properly, and they've been pushing a lot of campaigns, a lot of advertising, targeting the everyday user on the Google Pixel or the Google Android platform, and also the enterprise user. So it's left to be seen. But the stock has really not, pulled back significantly. It's just down less than 1%. So Tesla on a very negative very negative, note today. Tesla released the much expected delivery numbers for 2024. The street was actually expecting about 1.8 million units, but Tesla is actually underperforming and reporting something far lesser, about 1.7 million, which is 1.1% lesser than what they actually reported last year. So for the second year in a row, Tesla is underperforming in terms of the number of vehicles Tesla is able to deliver. 19 analysts on Wall Street, especially the ones collated by LSEG, are actually saying if Tesla continues to underperform based on the number of cars they can deliver, a whole lot of the movement, the bullish movement that Tesla had at the end of 2024 might actually get caught enough, which is actually a major worry for Tesla investors. Tesla Robotaxi is not also a major confidence boost because Robotaxi is still much of a major experiment. The only company that has really put something off is Waymo with about 10,000 robotaxis in few cities in the US. Yes, it's promising, but not something that can actually pull the needle. Also, the competition in China is also affecting Tesla. Cheaper Chinese hybrid and also competition from BYD is a major problem. Also, the subsidies in Europe is also no longer available. All of this is part of the bearish stories why Tesla is likely to underperform at least in the first half of this year. And you can see the stock is significantly down by about almost 7%. On another negative note, but not that negative, but it's something that if you have exposure to this stock, you might actually take note of this. Hindenburg, one of the most respected short sellers on Wall Street, is actually taking a shot at Kavana. Kavana is, the second-hand car company platform, web platform that really did so well last year, more than 150%, if not more, in terms of 1 year performance last year in the stock price. But Hindenburg is not necessarily seeing any fraud or any discrepancy in the financials, but they are saying the stock is overvalued. They also said they have major concerns about insider sales and some toxic loan deals that the company is having. But maybe a very short review of what Hindenburg has achieved. Hindenburg made some successful calls, short selling calls on Wall Street. They were the one who exposed Nicola for being a fraud. The company was actually just pushing down the truck, and they lied to the market that the truck was actually working. Tingo Group, a Nigerian company that listed on Nasdaq through a reverse merger, was actually also exposed by Hindenburg, and the stock has actually been delisted. Nicola has never, recovered from where they were. So Hindenburg saying it's overvalued, toxic loan deals, insider sales. The stock is just, marginally down by about 1%. But this is something you might actually pay attention to. On also the last negative tone, the last negative headlines that we are reviewing today. Apple is making some moves in China, but is not a good move. Apple is actually offering discounts up to 500 yuan, which is about 69 dollars on the latest iPhones. It's a 4-day promotion that will run between the 4th to the 7th of January. Several iPhone models will also be covered. Apple is actually grappling with market share in China, which is the world's largest market for smartphones. Now, for me, Apple is not necessarily going to see a serious pullback from this news. Number one is Apple is yet to launch Apple Intelligence in China. Apple is also looking to roll out Apple Intelligence across different markets this year, at least in the first half of this year. Apple is also planning to launch or perhaps give us a hint about when they are going to launch their first foldable phone. Apple is also looking to do some great things, especially when it comes to the Apple ecosystem. So even over this weekend, Apple will be offering, excuse me, Apple will be offering about 2 to 4 days free viewing on the Apple TV platform because Apple wants to give people a snippet of some of the shows like Severance season 2 will be launching in the next couple of days. So maybe this is just part of some of the mouth-watering discounts that Apple just wants to use to ramp up some of the numbers they are looking. I don't necessarily see this as a very big headwind for Apple. And yes, the stock actually pulled back by about 3%, which is very, very significant for a 3 trillion company. Now, the winner of today, and on a positive note, ending the doom and gloom. Uber is getting a major conviction peak at Goldman Sachs. And so, before I actually talk more about this, if you're liking what we're doing, all the updates, the daily updates, the information, the market information, portfolio analysis that we're doing, please subscribe to our channel, put on your notification button so that you don't miss any detail. This is the only way you can support us, and we actually promise to continue to deliver much more information than you expect. So, coming to Uber, Uber is getting a conviction peak at Goldman Sachs. Goldman Sachs actually believe that Uber is a major stock that is going to outperform this year. because Uber will continue to increase its booking. The company is not going to seriously have any major competition, according to Goldman Sachs, from from the Tesla robo taxis and the autonomous driving that the market sentiment was pushing towards the end of last year, that pushed Tesla's stock by close to about 70%, and Tesla is now pulling back. So there seems to be a relationship between Tesla, whereby if Tesla pulls back, Uber tends to actually go up in stock price. And Goldman, I actually agree with Goldman because Uber is my major stock to perform this year. Uber is profitable, they are a global business, and I don't see any major headwind for Uber. In fact, as a matter of fact, Uber is a mature business that will only continue to do better as more people continue to book holidays, more people continue to go on business travel. A lot of businesses are actually going back to the office, increasing number of office days. So Uber is a major stock for me as well. On that note, we close it for today. It's the first day of trading on Wall Street. So wherever you are, wherever you're watching us from, please share your comment in the comment section below. We want to hear from you. What are the major stock picks for this year for you? Tomorrow we'll be unveiling the stock picks for this year, and that will be the major things we'll be talking about. Less about the stocks moving in the market, but more about the conviction picks that we have for this year. So in the comment section below, let's know what you are going to actually choose for the year. So please continue to subscribe, share your comments. By the time we meet tomorrow to share some of our conviction picks for the year, we hope to actually see a better tomorrow in terms of what happens on Wall Street. Thank you so much. Keep investing, keep growing. Take care.